Today's recap is a little bit different because we have two beautiful trades today from NASDAQ. I read price absolutely beautifully. Let's jump straight into these trades so you guys can learn exactly how to take these same trades I'm taking each day. So here we are, boom, on the 1 minute time frame. You can see both trades right here. This is a 1 to 6 almost, and this one here is also close to a 1 to 6. Now, let's go ahead and recap both of these, okay? First of all, let's start on the daily time frame. On the daily time frame, what you see first is we have this beautiful daily fair value gap. This served as my original draw on liquidity for today's price action. Yesterday, we had an inside candle. So what does that mean? That means neither the high nor the low broke above or below the previous daily candle. So that leaves it kind of hard to draw a daily bias, but for me it wasn't because we still had this untapped daily gap above us, so I'm looking for price to draw into that. Also keep in mind, this low here is the low where we swept out the previous month low, and we also have an SMT down there, so it seems like a protected low, okay? So no real reason to go all the way back down here. Today's price action, whenever we open, we'd already taken out the previous day low, which is this low here. Then we've just sent higher, so clearly overnight we were very bullish, right? So I'm looking for the draw on liquidity to be that daily gap. From that daily gap, I'm open to taking shorts because that's our draw on liquidity. After we hit that, also keep this in mind as well. If we look at from this high up here, back here, all the way down to this low, that daily gap, the start of that daily gap is the 50% of that leg. So once we've hit that daily gap, we can know we've rebalanced to 50% of that leg down, okay? Which means we could see a retrace down lower. I'm not saying we're taking out these lows down here. I'm just saying that the 50% and that daily gap has been tapped, so we can at least look for a retrace to the downside. On the 4-hour time frame here, we see a beautiful fair value gap right here that in our minds we can think maybe we'll be using that to continue up into that daily fair value gap, right? Now, if we go into the hourly time frame as well, I like to just do a top-down analysis. Even if there's not something of relevance on each time frame, it's great to look at them so you know what's going on. On this hourly time frame, when market was opening, there was really nothing for me to see here. We have this gap here, but we already have the 4-hour marked out, and higher time frame holds higher power. So we don't really care about this 1-hour gap too much. And also, we can observe it a little bit and see that, okay, we had this gap, we came down, we swept it earlier, and we mitigated it, and we got a beautiful rejection out of it and continued higher up. So for me, that's my high time frame analysis. I'm bullish up to the daily gap. I'm thinking maybe we'll use this 4-hour gap to fuel us to go higher up into that gap, or maybe we'll just react out of that daily gap. And as you'll see, both things played out today. So let's go ahead and go down into the 5-minute because this is where I like to do a lot of, actual low time frame analysis, okay? So for this, I'm looking at, we have all this chop, and for me, what that chop is, give me 1 second, let me fix this gap here, boom. All this chop in here is just accumulation, and what do we know about accumulation? Manipulation and then distribution is what follows. So that's low-key what we're looking for, right? Accumulation, manipulation up into one of these gaps or down into this gap, and then distribution the other way, right? So it could have been that played out, or we also were thinking maybe this is what plays out, right? Manipulation down into this gap to send us higher. And low-key, it looks like that's what's playing out right now. But it doesn't mean we're wrong on the first idea either, right? So what happens, right? Market is on where my mouse is right now on this vertical line. For me, it's 8:30 in the morning. Okay, let me move this over so you guys can see a little bit better so my cam's not blocking it. But you can see instantly when price opens, market opens, we come straight up here and tap into this daily fair value gap. Now, I want you guys to also understand that the previous Friday's high was this high right here. So it's also the start of that gap. So at the start of this gap, I'm knowing in my head we have a lot of liquidity built up here. Okay? So when price opens, we come straight up and tap into that liquidity, tap into that gap, and we get a straight rejection. So I'm thinking, boom, we've grabbed that liquidity. We've got a beautiful rejection here. We've also just swept out all of this accumulation here. So these range highs here, we just swept all of that out. We swept out the Friday high and we've tapped into the daily gap. I'm looking to short. So how do I short? Okay, Well, as you guys should know by now, I love trading 5-minute or any rejection blocks, but specifically 5-minute rejection blocks are beautiful to me. So I look here, boom. I wait for this candle to close. We have this 5-minute rejection block. I'll go ahead and turn on the middle line and I'll add some text to make it even clearer for you guys. 5-minute RB, boom. Right there it is. Cool. So I hope you guys can see that. So the reason this is a 5-minute rejection block, let me actually turn off all of these drawings. The reason this candle here is a 5-minute rejection block, if you don't know already, is because we've tapped in or we slept liquidity, right? We've tapped into a PD array or we slept liquidity. In this case, we did both of those, okay? And we got a nice close, a rejection out of it, and it's a bearish candle. For a bearish rejection block, you want either a bearish candle to be the candle that's the rejection block, or you need the following candle or a candle after it to be bearish. Otherwise, it's not valid, right? So for this candle, perfect. We get a bearish rejection block 5-minute. So I'm already looking to get entered into this position now. So what I do is I go on the 1-minute time frame now. After I've marked out this 5-minute rejection block, right? I have it where I can see the CE and I can see the start of it, and that's pretty much how I do it, right? Then I go down into the 1-minute. I pull the Fibonacci tool from the high right here. Let me circle it for you so it's even clear. Boom. I pull it from the high here, and then I just keep adjusting it. So this whole time price is dumping, I'm pulling it. Like right here it was, then it was here, then it was here, and then finally it was right here. So that's how I'm pulling the Fibonacci tool. And as you can see, this 786 ends up aligning absolutely perfectly, almost to the tick, if not to the tick. But with that start of the 5-minute rejection block right there. So Fibonacci is aligned. Beautiful rejection block out of our gap, in line with our narrative. Everything is looking crystal beautiful here. So all you have to do is place your entry right there at the start of that gap, the 5-minute rejection block. I like to place my stop loss above either the 786 or also the CE of the wick. You cannot have it lower than those two. So sometimes if it's like this, let's imagine this was your Fibonacci, so the 786 is up here and the CE is right here. You would want to raise the stop loss so it's above the 786. In this case, the most discounted level is the CE, so I made sure it was above that, right? That's my stop loss, above the most discounted level. Sometimes it's the 786, other times it's the CE, just depends on the setup. So that's why my stop loss is above right there, which makes this a 15-point stop. Clearly, I could have went like a 12, whatever, but just 15 was nice and clean. It gives me enough room that we can tap the CE and respect it and not get wicked out. Now, if you want to play it extra safe, you want to go for a little bit lower RR, it's no problem. You can raise it up here. You could have like a 25-point stop loss, cover the entire wick, because this entire wick is a rejection block. But the most sensitive part is going to be the CE. So that's why I do the CE, because I like higher RR. But if you want to play it safe, you want to get stopped out less, go ahead and use the full wick. Keep that in mind for the next trade, okay? Anyway, so boom, we get tagged in right here. Price runs straight to our TP. Of course, we get this retrace here, and I know people would have been, because like it doesn't hit until right here. During this candle, people would have said, oh, why didn't you close right here? We edged your TP, just go ahead and close it. No, the reason we don't close it is because look what we have here. We have a 1-minute fair value gap that we came up, rebalanced, tested the CE very nicely, maybe even the 75% of it, and then we kept dumping down to our target. So that's why you don't trail your stop loss too aggressive. You just want to leave it at BE. You could have definitely moved your stop loss to BE at this 1-minute fair value gap, but you don't want to trail it past there. No reason to do that. And here you can see 5.93 risk to reward. Okay, absolutely fire first trade. Now, I'm going to be straight up transparent. I missed this trade because I was such a pussy, right? I sat here and watched price straight rocket up from this level here. It's only a couple minutes after market open. I pussied out. That's genuinely what I did. I pussied out, okay? That is horrible of me. I broke my rules and I pussied out. We had an A+ setup and I didn't take it. Terrible, 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 terrible. I'm still kicking myself at this time, right? Terrible of me. Do not do that. If you see an A+ setup, it follows your rules, it's in line with your plan, it's in line with your bias, all of those you have to execute because you cannot afford to miss these setups like I did today. this one in particular is what I'm referring to, not all of them, but just this one, right? So if you see A plus, it's in line with your narrative. Take the setup, bro. Do not pussy out. You cannot let fear into your trades. You cannot do it. Okay, I just had to get that drilled in because it's not even for you guys, it's for me as well, because I let the fear into my trade today. So I missed that trade, but I was watching it, I tapered it, I had my entry ready, I just didn't press the button. Okay, horrible. I cannot let that happen again. Okay, but I grounded myself, I locked back in, I was patient, and here's where the second trade comes in. So where'd price go? Okay, so we tapped into that daily gap, we get a beautiful rejection out of it, right? We're coming down, 10 a.m. opens, 10 a.m. opens, we come down and we tap into this gap, right? That's perfect. I'm like, beautiful. We're thinking longs here. Also, this manipulation above is low-key enough. It's 36 points, but I'm still thinking we're bullish because look at price, right? 15-minute time frame now. Look at price. We're just going straight up, straight up. And what have we tapped? This daily gap for sure. Okay, but we got our retrace now back into this 4-hour gap. So I'm thinking if we want to see higher prices, this is where we're going to do it from. Not only that, if we look at the 5-minute time frame here once again, because this is what I was watching, right? We came down, and not only did we just tap this gap, we also retested the midnight open. Okay, so midnight open, 4-hour gap, in line with our bullish bias overall. I know what you're thinking. Why were you bearish up here, right? Again, 50% of the range, daily gap, and we had that Friday high get taken. So I'm looking for a retrace. Not a full thing down to all the way down to these swing lows down here. I'm just looking for a retrace to send us down into this gap to use it as fuel to continue higher, right? That was my bias for the day. Or, you know, we could have also, like I said, we could have just came down, tapped into this, and went up to the daily gap. Didn't matter to me. But that's why I was open to shorts, and that's why I still like longs, okay? Sorry if I repeat myself. I just really want to make it clear on what I was thinking because I think that's what helps people the most. That's what helps me, is hearing people talk like this. So that's why I'm doing it for you guys. Anyway, continuing on. So now we tapped into this midnight open. We've tapped into the 4-hour gap. It's in line with our bias, and guess what we get? Another beautiful 5-minute rejection block right here, this white candle. So again, what do? Okay, well, I already have it drawn out, but let me do it again, right? We take it, we boom, draw this 5-minute rejection block right here. We already have the middle point on, 5-minute RB, boom. So you can see we have this beautiful rejection block now, go on the 1-minute time frame, and what do? Well, we pull the Fibonacci tool from that internal low right here, all the way to the internal high up here. And again, how am I pulling it? As the candles are developing, it was like right here at this high, then I go up to this high, right? And then finally reject. So this is where it is. Now, this is even cleaner because now we have a beautiful no-wick candle here, devil's mark. And if you guys know anything about that, whenever you have a no-wick candle, it's a very beautiful place to take profit. It's a very beautiful target. It's a good draw on liquidity. No-wick candles. What does that mean? There's no top wick here. And as we know, we don't normally see price leave no-wick candles, so we expect price to come up here and at least tap into that. Also, we're low-key looking for a retest of 10 a.m. as well, which is why the TP is set right there, okay? But again, we have beautiful 5-minute rejection block here with midnight open. We tapped into the gap, so that's where we're looking to enter. Then we pull our Fibonacci tool from the low to the high, and what happens? The 786 almost perfectly once again aligns with the start of that 5-minute rejection block. So what do? We place our entry at the start of that 5-minute RB, and again, like I did on the last trade, I place my stop loss just below the CE as well as midnight open. Now, unfortunately, as you guys can see here, and I'll literally turn on my executions as well, I got entered in right here on the top of the 5-minute RB, and unfortunately, price here wicks me out, and then you can see we ran straight to the TP. So this is why I was saying in the last trade, sometimes, and not even sometimes, but anytime it's valid, it's okay to put your stop loss at the low. Here, it wouldn't have extended my stop loss too much, so I probably should have just done that. But I personally, like I said, like to go for lower RR, so I had placed my stop loss where I placed it, just below the CE, and unfortunately, I got wicked out. Now, this is a super frustrating day for me, because like I said, I missed that first trade, did not follow my plan, follow my rules to execute on this trade, and then what do? I take this trade here, and I get wicked out by literally, let's see, by literally 1.25 points, bro. 1.25 points, and then price runs all the way to my TP, almost to a 1 to 6. Could have extended the stop loss up here, whatever. I would have taken profit probably at 10 a.m. So frustrating for me, right? So frustrating because I saw both trades. I executed on the second one, not the first one, and the second one wicks me out by 1.25 points. But do I overtrade? Do I go back into the charts and try to make it back? Do I do any of that? No, I don't do that because I know my strategy works over a period of time. I know if I just continue following my rules and following my plan, I will get the money back. It's okay if you blow one account, two accounts, whatever. Over time, doing this strategy, you will be profitable if you stick to your plan and follow your rules. Today is a perfect example of where I did not follow my rules on that first trade, and that is completely unacceptable of me. So you guys can learn from this as well as I can. You cannot deviate from your plan. You must stick with it, follow your plan, stick to your rules, and execute when you see those A+ setups. This video has been a little bit longer than I wanted it to be, but I had to recap both of those trades for you guys and teach you guys a lesson and also teach myself a lesson here. Unfortunately, I'm walking away with a losing day, even though I watched and read the market absolutely perfect, okay? Hopefully you guys enjoyed this video and learned something. If you guys haven't been learning stuff from these videos, you probably haven't been watching because you guys are watching this play out in absolute real time. If I would have taken these trades correctly, if I would have taken this first trade, I would have been up 1 to 6R. If this trade, I had just either a little bit bigger stop loss or the full thing, we'll even say all the way at the wick, it would have been a 1 to 4. So I would have been up 10R on the day, which means you could take 10 losing trades in a row before you're back to break even, right? So you can see how this strategy plays out. Even though it's a 30 to 50% win rate, the odds are in your favor, okay? Again, I hope you guys learned something. I hope you guys had a good trading day. Leave some comments down below. Drop a like. And that's pretty much all I got for this video. I'll catch you guys in the next one. Peace.